Guys, can everyone hear me? Or anyone hear me? Okay, great, David. Thank you so much. Okay, guys, let's get started. Let's take a look at the trade plan. So, the first thing I always want to point out when we've had a run like this, and not going into, well, first of all, the idea of starting a little bit earlier is two things. First of all, my personal performance and my own trading has dropped off a little bit. And so I'm hoping to get at least 10 minutes prior to the open to get prepared. So I have a better sense of obviously what I want to do for my own trading account, since that's where I make the majority of my money, actually all my money. So and the second idea is I'll give you all hopefully a couple minutes to ask for any clarification if any is needed. And then hopefully that'll also give you time to take the trade plan, kind of think it through, and note up your charts where you want to take trades and where you don't want to take trades. So I'm going to step through this morning slowly and then go from there. Give me 1 second. I want to make sure everyone's got. Okay, everyone's cool. So first, let's start with what the market has done and is doing, and then try to take it from there. So if you look at this run, is fairly enormous. If we look at the run from the bottom on ES, this is essentially 1730. We've essentially had a 100-point run. But if you look back in history in terms of, is this precedented or unprecedented, right? Well, even recent history would show, right? From the bottom down here, we ran from essentially 1635 before we stopped this run with a couple of down days. We ran all the way up to 1805 roughly. So that's almost a 200-point, is that right? 1630 to 1810, close to 200-point run, right? So it's happened before. Obviously, we didn't go in a straight line. The closest thing we had to a straight line and the number of days up, there was a bunch of them right in here. And so we came from 1635 all the way up to 1735, almost a 100-point run. However, what I want to point out is if you'll look, and I don't have my pens up, so let me pull that up real quick. Even when we got up to this point where we had a 100-point run, everyone thought, well, we're going to go back down. We had one down day, right? And we one-timed all the way through this process, just like we're doing now. We had one day where we stopped one-timing, and then we resumed back up, and we went into a long period of balance, right? And this covered almost a solid month of trading for balance, which would be great. I would love it. However, I'm no longer necessarily looking for the rollover straight to the downside. So that's the first concept. The second concept is there's nothing that says we just can't keep trucking along here and keep going up. It just depends on how much animal strength is really in the NQ, which is already at new all-time highs, new year-to-date highs, not all-time highs, new year-to-date heights and decade highs, and whether ES is going to follow it up. It has every step of the way of this rally. So I'm not going to be, larger picture, overly eager to look for the short side, nor am I bearish, right? I'm going to assume, just like in all these days where there was balance here, you'll notice that all these closes, right, very few of them came at the bottom. Most of them came near the high or the middle repeatedly, day after day. There were a few, actually out of this series, there were two that closed at the low. Everything else closed either in the middle or at the high of the day. So what does that tell me? First of all, it tells me we're in a bull market. Secondly, it tells me if I'm going to trade and I want to be conservative, right? I want to be a conservative trader. I don't want to get run over on the short side. Clearly, short has been harder than long the last couple of days. That I'm going to wait for rotations down, and I'm going to wait till post 9:30 a.m., right? And I'm going to start to look for counter trades back up. Not everyone who works with me coaching-wise is simply a 2-point scalper, right? So some of my traders are swing traders, and so if that's the position I want to have and I want to maintain my high odds, meaning I'm launching swing trades from the zones and I'm taking scales as we go up, I'm going to focus primarily, if that's my objective, I'm going to focus primarily after 9:30, and I'm going to look for rotations up, and I'm simply going to let the market, I'm going to fall into my swing trade. So those are the two things I wanted to state. Shorts have been more difficult. Longs have been much easier. And longs after 9:30, so you don't get caught in any of these quick, brutal rundowns like we had all the way through this process in the AM. We had quick rundowns in the first hour, followed by pushbacks all afternoon. This is the model I'm going to look at until I see it look different. Okay, so let's go to the chart today. That is I will get my NQ out as soon as possible. By the way, I just simply haven't had an opportunity to finish it. So it looks like, if we're to believe where we're at right now, that 1823 3/4 looks like where we're opening, which is just below, puts us right here. Okay, that puts us just below a pretty important area. Globex high was 1827.5. Gap fill is 1824, and I have the zone above is 1825.5 to 1827.50. Really, what happens is this whole thing, okay, is a zone. So the one issue that we'll be looking at as we push higher and higher, again, as everyone knows, I generally, unless we get some kind of extreme tick, do not take a trade out of the gate. So the first thing that I'll be looking for, I apologize, I got distracted, give me one sec here. The first thing that I'll be looking for is to see if we can push above these Globex highs. Now, the other thing that I'm keenly aware of is, even though I don't expect us to have a dramatic rollover back to the downside, as people chase higher and higher, shares transfer from strong hands that were buying much lower into weaker and weaker hands, and that can produce rather dramatic sell-offs in the first hour to hour and a half. If you want an example of that, again, go back and look at that last major run-up we have that I was just showing you on the volume profile, and look at how the market behaved on some of those days in the first hour. The sell-offs were brutal. You would have thought it was the end of times with the way it was selling, and then 9:30, 10 o'clock got here, responsive sellers come back in and push it back up. Responsive buyers come back in and push it back up. So what's our first test? Well, if we open at gap fill, that obviously kills that trade, right? So then the question becomes, in terms of strength immediately, is can we get above Globex high? That becomes the first test. This assumes we open right where we're trading right now. We're still a good half hour away. If we can get above Globex highs when we don't reject out of here right out of the gate, I will look for rotation up to the 32, 34, and then up into initial resistance. You will notice that I have left lots of breathing room in between these two zones. The reason for that is because of the size of the range that we're having, I'm actually skipping zones. Technically, there is a zone there. It's approximately 29. It's actually 29 to 30 and a half. Okay, but I'm going to go ahead and give it the benefit of the doubt and give it the stretch up to 32, 34. Because I don't want to get in a situation where I'm coming in and out too quickly, and I want good stretches. Also yesterday, look at the size of the drives we were having. Again, I was looking for a minimum of 6-point ranges. If you were getting run over or uncomfortable with the ranges, push that to 8 points. My range is always 6 to 10 points. I'm looking for a 10-point larger rotation, but in terms of the market moving from point A to point B, I'm looking for potential rotations back up, even if they're short ones, meaning 2 points, starting when I get a 6-point rotation. You don't want to, the point of the coaching and the point of doing all this is not so that y'all trade exactly like me. The point is that so you learn how I've taken these zones and I put structure around these zones to suit my own trading style, and then you adapt it for what fits both your personality and your ability to handle risk. Not fast trading and aggressive trading is not for everybody, nor do you need it to make money. The theory and basis behind all my trading is that all you need is 1 or 2 solid trades a day to get between 1 and 2 points on each of those trades. That's all you need, and preferably those trades come prior to 10:30 a.m. Or 11 a.m. Central Time. That's when you have your highest odds. I want to be clear on that. So if I were a conservative trader, right, I'm not going to trade any of this. What I would like to see is a rotation out of this area, either up to this zone or this zone. Okay, those are the 2 areas I'm looking at. If I'm a conservative trader, again, what I want to see, if we're opening up at 1824, I would like to see a test down towards the 1816, 1818 area, preferably towards the back. If you're aggressive and it's a 6-point rotation, you can take the front. But if not, and you want to be a conservative trader, and here's the key, you can move to the back of the zone. However, you got to realize 2 things. if we've come into the front of the zone, we bounced out, and then we come to the back of the zone, this back of the zone, if you've already gotten a 2-point rotation off the front of the zone, the odds decrease of a successful trade. Does it mean it won't work? No. Anyone who's been with me for a long period of time knows that the trades out of the back of the zone repeatedly garner 2 points, sometimes day after day after day. It's a great trade location. You also know in other markets, there's times when we never get back to that middle to back, right? Touches the front of the zone and takes off. I can't teach all the small nuances to everyone at once, meaning everything I'm looking for. I am looking at the dome to see if there's a pause in the dome. I do have a feel for the speed of the market, right? And I can tell when it's not going to rotate all the way down, and when it is going to rotate all the way down. But I can't communicate all of that over Twitter, and B, that skill simply requires seat time and experience. I've been doing it for 20 years. A great example, if you want to see where the dome stopped, literally stopped and gave you a chance to get in, was if you look on Wednesday at 1812. I had a bid at 1812. The market literally came down there. And if you look on a tick chart, you'll see that it actually sat there probably for a minute, maybe a minute and a half, 1812 to 1812 and a half. That is the dome stopping. That is what I'm looking for. Now, I have no way of communicating that effectively. If you looked at it, you'd see it trading up and down. But trust me, it stopped. I just simply sat there. I didn't want to audible. I thought I could get my fill at 1812. But there's many times when I'll just change that order to a market order because I've seen the dome stop. So it's essential. You've got to adapt these general guidelines to fit your trading personality. Secondly, if you're having a hard time in any given week, okay, my drawdown on any given day that's acceptable for me is 10, sometimes 12 ES points, depending on what my P&L is running into it, okay? For the week, I am willing to draw down up to 25 ES points before I'm done for the week, and I'm nowhere close, okay? Generally, I never ever, I have not been stopped on a weekly basis in, I think it's been since 2009 when we had those 50-point ranges. That was the last time I got stopped on a weekly basis. Secondly, I do lose money occasionally, as does every good trader, right? And I do occasionally have down weeks. I've been through this process before. Guys that have been with me, particularly in October, know how difficult it was in October. And why was it difficult in October was because we kept getting run over by open drives. If you'll look at, if you'll go look at October, you'll see that we had day after day after day of gap and go. So what have I adapted in there in terms of my clients to protect them from that? Two things. First of all, every morning I review what does an open drive look like. So let's go over it again right now so you can identify it and you're clear because this is where the damage comes. Open drives, if we open at point X and we get, or you can just go look at yesterday morning, right? 1, 2, 3 bars. The first bar is the low of the day and is never penetrated. 3 bars up. Now, it doesn't have to look exactly like this. It can be one solid bar up and be very fast. But either one of these two is a dead giveaway that we are potentially in a trend day up, okay? What is that accompanied by? That is generally accompanied by a tick on most days, assuming a gap up. That is accompanied by a tick that is very positive, meaning somewhere between 600 and 800 usually. It is also accompanied by the first hour having almost no negative ticks. When you see those 3 things combined, and if you're a counter trader and that's the only trade you have in your bag of tricks, go have a cup of coffee till 9:30 in the morning because it's not going to get easy till after that, and maybe even 10 o'clock. And it may not get easy the whole day. Most trend days up historically are tradable, right? But you have to pick the right time frame, and the right time frame comes after 9:30 a.m. If you want to be an aggressive trader and you want to follow the trades that I'm taking, which I share because some of the coaching clients I have are aggressive traders as well, you're welcome to do that. But you've got to mentally look at your trade plan and write it down. I am taking all trades, or I'm taking aggressive trades, or in your trade plan should be written down. I'm not an aggressive trader. I can't stand to have 1 or 2 stops back to back. And if I identify it as a trend day, I'm going to not trade the first hour to protect my equity and to protect my psyche so I can keep coming back and doing this day after day and I don't feel demoralized. Now let's look at what yesterday happened. Yesterday's was characterized, and you can go see it. So you recognize that the next time it happens, although it does not happen very often. Now I want to go through this so you can recognize it today. For some weird reason, we were suddenly to gap down. Let's change this to candlestick. Okay. Expand this out. First bar, okay? First bar goes from 1803, this is the first 5 minutes, all the way up to 1807. That's a 4-point drive. The low never comes close to being penetrated, and if you look at the tick, which I'm not going to load right now in interest of time, the tick registered on TradeStation at least at negative 1100, okay? When you see this, and you see the first 3 bars, the first 15 minutes go like this, and I identified, in addition to that, that this, I think it was 1808 area was questionable, and I actually considered not using it as a zone, and that it should only be used for aggressive trades. Okay, so you've got to take your trade plan right there and go 1806, 1808. Simon kind of thinks that's a questionable zone. It's there, but he doesn't like it so much. I only need the highest odds trade. That's off for me. That means 2 things. If the trade comes in, right, and rejects down, you can't turn around and go, well, I should have taken it there, because that messes you up psychologically. It never lets you make a good decision. Whatever your decision is, stick by it and look for your next trade. As it was, it came in, rotated lower. I identified it as an aggressive trade. It almost gave me my 8 ticks, didn't quite get there, and I moved stop to break even. That's exactly how you trade an aggressive trade. The trade just has to work and fall into it, or get the hell out. There's not another way to play it gracefully. Okay? So now you know. If you see this pattern right here on gap ups, even on gap downs, an extreme tick, and I had 2 clients actually identify this, and they each had 20-point days. Congratulations to both of them, by the way. Fantastic. This is a great trade. You need about a 4-point stop some of the times to make it work, but it is a great trade. It's not a trade that I usually talk about in my arsenal, but I thought I should cover it since it happened yesterday. The other thing you know about this is that now until 9:30 in the morning, this thing is going to be one hard trade to counter trade, and you got to be fast. So if you're a conservative trader, you simply go, I'm waiting until after 9:30. I don't want to get smoked. It would piss me off. And that's that. So let's move on to the back to today. I think I covered that enough. Okay. Things to be cognizant of today. First of all, will we get an open drive out of the gate? Open drive is going to have to accomplish 2 things. Not only does it have to be an open drive, but the open drive really needs to accomplish getting above Globex high, so we have some room to move to the levels above. If we get an open drive right into Globex high, it becomes questionable now, and we can go either way. And if we stop right there on the open drive, I probably won't, well, if I was long, that'd be nice, but I probably will not take a fade of the open drive at Globex highs, and what that means is I'm willing to forego if we reject and roll over to the downside there. I'm simply going to roll, and we start trading down from there. I'm simply going to roll to that 9:30 to 10 o'clock time frame and look for counter trades from levels lower. That's all there's going to be. Why? Because I don't want to get blown out first thing in the morning by busting Globex highs and having a short squeeze right up into this zone. Next concept that played in yesterday, again, I discussed if we were able to close above Wednesday's highs, we would trade to the other end of the range. Same thing today. If we get above and we trade at this zone, we come back in and we close back below, really what you need is to close back below gap fill, okay? That will most likely mean that we'll travel to the other end of the range and test Globex low. Doesn't have to happen, but it's what I'm looking for, where I would expect to find responsive buyers the first time in, and I would also expect to find responsive buyers first time in to the white zone. Again, assuming I'm getting at or very close to my 6-point minimum rotation. So I'm looking for, again, on the downside, if we move, I would suspect we're first going to test Globex highs just given the recent strength, and then come back in and test the Globex lows, the white zone, and I will also be looking to take trades from yesterday's low. I would expect to find responsive buyers, and then really each of the zones below, right? It's just a lot of people have missed this rally, and you have to assume that there's going to be buyers underneath, at least attempting to get positioned, right? And what that means is we can still end up the day on the low of the day and get 2-point counter rotations all the way through here, okay? That's what that means. It does not mean I think we're going to rotate it back up. The typical pattern in bull markets on the downside is that we generally push up, roll down, then somewhere between 9:30 and 11 a.m. we push back up, and we tend to either close in the middle to bottom third, or we recover all the way back up to the highs. Is very common. This was the pattern almost daily on downside moves in 1999. I know that's going back almost a decade and a half, but this happened all the time. We get big pushes to the downside. We'd be down 200, 250 points, and by the close, we'd be up 30 points at the end of the day. So I've been there. I've seen that. It wouldn't shock me. I expect to see a lot of this pattern on down days. If there are any down days to come, I expect to see a lot of this pattern with a move back to the upside. Okay, so let's discuss how this would change, right? If we open at 1824 and we fail to get above gap fill, well, that would be a change in the primary scenario I'm looking for, meaning to test the Globex highs. And we get an open drive lower, okay? All these zones, no matter where they are, if it comes in the first hour, will be aggressive. Decide whether you can handle the stop or not, and if so, how much of a risk. The stop is always 2 points behind the zone, at least for me, 2 points behind the zone, right? So that means it's a 4-point stop from the front, 2-point stop from the back, and if I take 2 stop losses, as I did yesterday, back to back, I'm done with ES for the day, okay? Given this scenario, even if we push down, after 9:30 to 10 o'clock, I would look for responsive buyers. What would the trap trade look like in that particular situation? There's 2 that could set up, okay? If we fall below Globex low, find responsive buyers in the white zone, and then push back above Globex low, I would expect it to push to the other end of the range, and then possibly a break to the upside. If we reject Globex low after holding the white zone, and we come down for a second test, probably won't take that second test in the white zone without some very good tick divergence. And then I would expect tests the zones lower, where I would expect rotations back up, right? And again, I still would expect to push back up, but the push back up would come and close us probably near the white zone at the end of the day, as opposed to getting back above Globex lows and pushing us to the other end. So that'll be the determination. Again, to keep it basic, I expect a 2-point rotation at each zone. To give an additional filter, I'm looking for a 6 to 8-point rotation today to increase my odds of having that rotation come with less risk. That's all that is. On the upside for the trap trade, right? Very simple. All we have to do is get back above Globex highs, trade back below gap fill. That would cause a trap trade. How would I take a trap trade? Okay, well, I usually don't take a trap trade at the trap because my stop has to be all the way back here and it's a larger stop than I want to take. There is a way to take this trade that I go over with my coaching clients, and what it basically requires is taking a trade that's 1/4 of my normal 2-point trade that I take from the zones. Why? Because my stop, if I take it at 1824, actually has to be 2 points behind 1827.50. That's pretty damn close to a 5-point stop, and pretty hard to stomach for most people. So if you're going to have a double or triple the stop that you're normally going to have to make a trade work, you're going to have to cut your trade size so that your overall performance stays neutral, right? That does not, however, mean that you have to get a 10-point trade in order to make this trade work out. I still scale my normal scales and leave trailers on the way down, and I expect it to go to Globex lows, and I do expect at Globex lows, right, that'll be the other end of the range, overnight range, to find responsive buyers, and I would just want to leave a tiny trailer down into the white zone where I do expect responsive buyers today to push us back up. That's my executive summary. I want to take a look at NQ really quickly because there's some important things that you need to be aware of there. I'm going to go back to the volume profile. How am I doing on time? 8:14. I'm going to wrap this up in the next 5 minutes, just so you know, guys. So we stopped one timing yesterday, okay? But clearly we closed at the high of the day. There are examples of us ending the one timing phase, which I'm going to show you right here. Okay, we stopped one timing right here, and we still had 2 more days of up days before we had a big rotation down. This tells me to be on the lookout for a potential change in character. What would be that change in character in NQ? A couple of things have to happen. First of all, this is the prior, before we rolled over to the downside, high close. A close back below here, this 3620, gives us a potential move all the way, well, to retrace a portion of this move back down. There's all kinds of areas of support underneath here. Okay. The other thing it tells me is if we don't get above 3620, that this is technically a breakout, and there's nothing that says it has to come back and test. We can simply set day after day of new high, just like we did in here, right? There's no rule that says it has to come down. It could even go up for another 2 days and still roll over. I'm just looking for potential change in character. So what would some of those changes be? Well, first of all, NQ fails to get positive on the day. That would be the first change in character. Second change in character is NQ starts setting new lows before ES does. That would be another change in character, and leads us to the downside, right? We failed to get responsive buyers at this 3620, and then again at this 3600 level, which it should really hold, right? We could certainly test below and push back above and then push higher again. But the key to this is we need to maintain our closes above 3620 3/4 to maintain this breakout. And until we're below this level, I'm going to be very reluctant to press my short very hard on anything outside of a scalp on NQ. But realize this is still a 30-point rotation from where we closed yesterday. By the way, the market, NQ has been working in 30-point rotations lately. So a 30-point rotation down to this 3020 and let's just say 3021, I would expect to see responsive buyers in here. If it did not hold, right, it would not be shocking to see a move all the way down to 3590 right in here, and then still see a push back up and close just over 3620. Yeah, give me just 1 second, guys. I apologize. By the way, guys, to my coaching clients, if any of y'all have not received the TradeStation file yet and you need it, please hit me on Skype. I'll send it right over. So that's what I wanted to say on NQ. I am cautious. I do think this last part of the run-up usually catches the chasers and the guys who stayed short too long. And my only concern about that is we drive higher and higher, weaker and weaker hands get in. However, that does not mean there has to be selling. I'm just alert for it, and I'm going to make sure that I get my proper rotations. On NQ, really that means right now, until proven otherwise, I'd prefer a minimum. I need a minimum of 10 points and would prefer 15. And if you're conservative, 30 points before you're looking for a counter rotation, right? If you're aggressive, 10 to 15. If you're ultra conservative, 60, because that's what it's required in terms of rotations. If you look yesterday, we moved from 3600 all the way up to 3651, right? So if you want to make sure you're not getting run over, we've had multiple 60-point rotations from low to high in NQ over the last couple of weeks. If you don't want to get run over, that's what it requires. I'm really keeping my eye on 30-point rotations, and I would mark it off and keep a constant watch, right? We're trading at a certain price level. For example, we're trading 3,700. I would come back and mark 3670 as a 30-point rotation down, so I'm aware of it. Really, that's all I have for this morning. I'm going to go through and set up my trend charts real quick, and I'll share that with y'all, but I'm not going to break them down piece by piece. I am going to leave a second here. Does anyone have a question over what I went over? I'll give it a minute. Otherwise, I'm done. You're very welcome, Murray. Thank y'all for attending. Hey, no problem. I hope everyone has a great day. I'll throw up some charts as I can. Yeah, Chad, it's OPEX but it's not. I don't think it's a big option expiration Monday. They might try to pin them at the close. Most option expiration goes off on Thursday, so I'm not overly worried about it. You're welcome, Joe. So guys, I hope this helped everyone. My pleasure, Mr. T. I hope everyone has a great day. I'm going to post some trend charts as soon as I can get them up, and I'm going to go get ready so that I can have a great day too. Talk to y'all later.